stood out to me. Now, we're going to hop right into that, and we have a number of examples to discuss. If we said we want to become a good investor or trader on a scale of 0 to 10, how important is support and resistance? The answer is 11. Okay. This is an area that you do not want to become like maybe mediocre in, and we'll talk about that in just a moment. Now, we also have Brett Crowther with us in the chat. You'll see his initials as BC. We welcome him. We also have Tuner with us. Jump in, Joe A. And also, yeah, and then we got Loha back to you, Scott. Hello. Sam, also Wyland, Will, Kevin, and many others. Welcome to all. Now, just real quick as we get started, remember you could also check me out on X. There's my handle at JamesBoydCS. Do post educational content there. Quick reminder that as we get started and we talk about this topic of support and resistance, remember that the examples are provided for illustrated purposes only. Also understand when we talk about examples, technical analysis is not the only way to view the market. It's a way. It's probably a really good starting point for sure to when someone's brand new getting started. Many of us start with technical analysis. And it's also a discipline that they would probably do for many years to come, but it's not the only analysis. Also understand when we talk about examples, we will do those on the Paper Money software application. Our examples, we understand that investing involves risk, including loss of principal. Also, I mean, maybe options carry a high level of risk, not suitable for all investors. I probably plan to kind of focus on stocks a little bit, unless you have some questions on options. I taught earlier on, what we talk about in Investing Master Series. If you'd like to do an example of an option trade, we'll do that. Okay. Now, we are in lesson 3 here today. And I want to kind of focus, just kind of take a step back for just a moment and say support and resistance, okay? So and we're going to break down what does this really mean, support and resistance. But I want to kind of think about, when we talk about support and resistance, it's not just in stocks, okay? And if we could use it in stocks, we could use it in options. If it could actually be used in stocks, it could be used in other products as well. So it's not just equity markets and derivatives. It's not. I mean, there's many products that use support and resistance, even interest rates. Second, we could also use support and resistance on different time frames: intraday, daily charts, weekly, monthly, quarterly, yearly, and so on. So this is applicable in so many different ways. Now, if you are a buyer and seller of products, whether on eBay or certain websites, you buy and sell cars or whatever, you buy or sell houses, you're really doing support and resistance. Okay, you're trying to buy low, sell high, or buy high and sell higher. So this is not just stock market specific. I just want to kind of say that. Now, the biggest also thing is when we talk about support, we're talking about who is controlling the stock. Is it bulls by the price being above support, or is it bears by the price being below support and at resistance? Whether we actually have the support could also tell us something about the trend, okay, if we're above support. And also the biggest thing is the support and resistance kind of also tells us about, are there opportunities for entries and exits? So, I mean, there's a lot there. So don't just think, oh, it's support and resistance. No, that's probably the major foundation of the trade, bullish or bearish. What the trend is, momentum, and so on. Now, let's go in and kind of hop right in and kind of talk about some of the definitions. So Barbara actually wrote here, support is an area where investors buy and prevent the price from falling farther. Well, that's historical, right? So when I think of support, I think of that's where there's been trust before, meaning when the price fell down to those prior areas, historically investors, traders were willing to buy. So when I think support or see support, I'm thinking that's where investors trusted that the price could actually hold. Support is considered a place where, as long as the price seems to avoid going lower. And I think we have to include for the moment. That line can change. So when could the trust or support change? If that price starts going down below that support, that trust by those investors starts to crumble. And all of a sudden they might say, look, I don't want to buy, I want to be a seller. Now, the thing is, Barb wrote for support and resistance. Support and resistance is an area. When I think an area, I'm thinking if I said support was 100, I'm thinking that support and resistance might be within 1, 2, maybe 3% of that area. But we probably have a pretty good idea of where the support or resistance is. Add 1 to 3%, and we're probably dead on in that area. Whether we touch support or resistance, the more times we touch it, the stronger it becomes. So when we say support and resistance, we're not talking about a high, okay? We're not talking about a low. A support or resistance is usually 2 to 3 weeks apart, where the keywords are that it's had multiple touches over days minimum. When we say days minimum, we're really talking about 2 to 3 weeks. Okay, so resistance, an area where investors sell and prevent the stock from going higher. The thing we got to remember is when we see support, sometimes we need to understand it's support for the moment. I like to also kind of give you this analogy. I never give analogies, but let's say I did. I think of like support and resistance. Okay, I said support like trust, resistance, think doubt. I doubt that it's going to go higher. Whether we're talking about support or resistance, I want you to also think about the analogy of a dam, right? If we broke the dam, the water comes pouring out. That's the idea. If we break resistance, all of a sudden the water, the liquidity, the new buyers, the people that have the shares, they add to those positions. So we're going to show that here in about 30 seconds. So the biggest actually thing is up until this time on resistance, the price resists moving higher. And the biggest thing is the more times it actually touches, the stronger it is for the moment. Okay. Now, I like to kind of take a look at a couple examples. Do you mind? Now, by the way, as we show the examples, we're going to show trades. Okay. Because the way you really learn something is you go out, I don't just say, hey, here's the bicycle, put your hands on the handlebars and put your feet on the pedals. No, we're going to ride the bike together. And then we're going to really see how that works. Now, one thing I want to kind of do is let's kind of start with the stock NEM. Now, what I'm going to do is I'm going to kind of just take this back for just a second, and I want to kind of look at this. So when I look at a chart, my mind is always thinking, do we have a support over the last 2 to 3 weeks? Not a 1 or 2 days, okay? 2 to 3 weeks. Now, on this chart, which let me send this to you, you're going to see that there's also some green dots. The green dots can kind of be a cheat, okay? Which, by the way, I'm not a professor. That's my dad. But the biggest actually thing is it can kind of help you cheat to see if there's horizontal or diagonal support. So what I mean by that is if we actually look at this chart and we actually see that, there's a circle. There is a circle. There, I mean, if you knew nothing and I just gave you this chart and I said, okay, can you circle these green dots? And then if you took a ruler or a level, are we kind of more horizontal or diagonal? And we could look at this without knowing anything about the stock market. We could say, look, there's been a plateau, a support, a trust, okay, where right around 90, the stock doesn't seem to really go lower than 90 right now. Okay, now, if we kind of did this on the top side, and if you don't mind, I'm going to do this. So we're going to use the green dots for lows and or support. If we get multiple lows in the same general price area, support, okay? If we get multiple lows, we could actually get diagonal support. We're going to come to that. But right now, in the same price level, we're talking about horizontal support. Now, the other way we can kind of see this, if we went back to this, and I wasn't going to go here, but I might as well, okay? If we said, look, can I go back to this little test tube right here? And what I want to do, just real quick, if I can, I'm going to go back down to this. So we went to the test tube. And about 4 down, you're going to see call, hold, and close below low of high day. Click on that. And now what you're going to see is the call hold is clicked to yes. Well, wonder if we actually go show close below low of high day. Well, let's do yes too. Well, those are not going to be green dots, they're red dots. Well, why do we care? Green dots support, red dots resistance. Okay. Now, if we do this, we're going to now click on apply. Now, same idea. Okay. This is where it's kind of fun, where you just say, take it down to the brass tacks. Well, if I looked on the right hand side over the last 2 to 3 weeks, same idea. How do I see support and resistance? Well, when we talk about resistance, we're looking at red dots. There's one, there's two, here's another one, there's another one, and then there's another one. Now, if I gave you a ruler or level and I said, okay, where do we get the most touches? Well, we're probably going to get the most touches right around about $96. Why do we care? Well, because remember I gave you the analogy. If we're at the price is at resistance, and all of a sudden the stock starts to get above resistance, and I'll show you how you can find that. Well, all of a sudden the dam's breaking, okay? Or if we go below the support level, we close below there and we start trending lower and lower, the dam is breaking to the downside. Now, how can you find the stocks that are actually breaking up or breaking down? In this example, we're just going to first say to the upside first for this example. One way we could actually do it is if we go, and I'll send you this chart too. If you said, look, James, where can I actually go and kind of have, so number one is use the dots. Okay, green dots for support, red dots for resistance. If they're both more horizontal, you have horizontal support and resistance. If, for example, you said, look, I want to see maybe based upon a chart, if we're breaking out of resistance, you have to ask yourself what duration of time. So you asking me? Okay. You're asking me? The duration of time we like to look at is a 10-day duration, which is 2 weeks of trading. The blue line is a 20-day, which is about 1 month. And that gray line right there is really about 2.5 months. Okay. So if all of a sudden we start to see the price go up to that orange dotted line, we're starting to break out of resistance. Now, if you look at this chart, all of a sudden on the right-hand side, we actually start touching that. And then we go up to the next. Now we touch it. Now we touch both. We get to a 10-day high. We get to a 20-day high. Okay. So this is another visually damning when you start. Oh, hey, wait. Price starting to break resistance. If the stock or whatever you're looking at is starting to hit those highs, it's also more confirmation of price breaking out. So let's take a step back for a second. How do I see support and resistance if I know nothing? Okay, use the green dots and the red dots. Second, if I said I want to visually see on the chart horizontal resistance breaks or diagonal resistance breaks, how else could I see it? Let me send you this chart. And by the way, if you're watching on recording, I'm going to put this in the description as well so you can have it. If you also said, James, but wonder if I just had a list and I wanted to see, I don't want to go one by one, what's another way I could see that? Well, one way is you could go to just these columns, and this is not new. Okay, I'm just trying to give you different ways in which you might like it. We like all things. Okay, we could actually go to this column where it says 20DH. The 20DH stands for 20-day high. That right, which by the way is that, let me check on that. That's the blue line. Okay, if you said that gray line right there, that's the 55-day high. DH for days high. So if you're getting and saying, well, how would I be able to tell on a list? Well, the stocks is doing that today on a 20-day and a 55-day period is Merck. Okay. Now, the first thing we got to say is, so if it goes up to a high, whether it's 10 days or 20 days, is it guaranteed to go up? We're talking about the stock market. Nothing's guaranteed to go up. Okay. But if it goes up to a high, it's showing at that point in time, it made a high. If you make a high, the greatest likelihood is to make a higher low. You make a higher high, higher low. That's called an upward trend. That's why we care. Okay. So there's 3 ways to, see this: green and red dots, look at the highs on the chart as well, or use the 20-day high, 55-day high on the market watch. Now, any questions first off before we start getting into examples? Yeah, that's right. The list is on my X, okay? So when you say your X, what do you mean by that? Well, this page right here, okay? So this right here, and when you say this, let me send you this link, okay? So if you said to me, hey, James, where would I see that 20-day high? Right there. That right there is the script code for the 20-day high you could put on the market watch for a list. That's the 55-day high right there, okay? So I'm trying to kind of give you some different tools, and you can, now, by the way, there's different times you like to use those different tools. A, if you're just on the chart in general, or two, if you're actually on a list. Both can do the job. Now, let's actually go to this. I want to kind of bring up kind of just some fast fire couple examples. So kind of notice what happened a little bit. And by the way, I don't want to do this and kind of smear and say, well, yeah, broke resistance, here's what happened. Oh, yeah, it was amazing and have a nice day. That would just be rude. I have some examples, some stocks that have led the move to the upside, but then we're going to come to some examples, okay? We're going to do at least 3 or 4, so just buckle in. Now, the biggest actually thing is when we go forward on this chart, you're going to kind of see that the stock just kind of smashed its way to the upside. I mean, my gosh, uncle, okay? Now, one of the things we got to understand something is when we get these moves, you can get the stocks. What's interesting about support and resistance is you can get the stocks, and this just kind of gives some people goosebumps when I say this, that the stock breaks resistance, and these support resistance lines, they create channels, okay? These channels also become measurement techniques to see the width of the channel becomes where you could actually add that to resistance, the width, and then get a target up or down. Now, what's interesting also about this, when you get a resistance, the path of least resistance, if we break above 98, it could go to 104. We get above 104, we could break to 110. We get above 110, the path of least resistance is that we could actually get up to 119. Now, so what happens is it just starts smashing its way through these lines. And if you can't see support and resistance, you might sell the stock short of the target, which would be horrible, okay? And then you don't really have proper expectations of where that stock might go to, et cetera, et cetera. So the biggest actually thing is when you look at these NEM, AM, they were kind of the same idea. Now let's go back to these kind of lines, which is, I want to show you this in a little different way here, which is more diagonal now. Now, if you said which one is most important, is it horizontal support or horizontal support, horizontal resistance, or diagonal support, diagonal resistance, which one is more important? I would say yes, okay? Now, one of the things that's kind of interesting about diagonal resistance is that means there's been in this case, there's been lower highs on the chart. Now, a lot of times prices don't just keep going down. Sometimes they can reverse back to the upside. Now, I'll show you an upward trending stock where we're talking about diagonal resistance, but let's first talk about diagonal resistance created from lower highs. There's our red dots. Let's say we know nothing about the stock market. And all of a sudden now we see another red dot. I'm going to circle everyone. Now, when I show this, I'm just going to circle these, and I think that's what we have. So now if I took a ruler and actually said, okay, I'm going to take a ruler, and I'm just going to kind of draw a line where I can try to hit as many of these red dots as I can. It's probably going to be something like that. Now, the whole point of this is, remember, think of resistance as the ceiling, the doubt of investors, where investors used to have the price go up and they would sell and it would drop back down, that resistance created from lower highs. But then all of a sudden, that resistance broke like a dam. And all of a sudden, then we start to break out, moving average crossover, and all of a sudden, instead of making lower highs or red dots, we actually start to make green dots. Let me flip this to where all of a sudden, if we're starting to get green dots on the chart, that really means that we're actually going from lower lows to higher lows. Now wait, if we see a green dot there, right here, and then we see a green dot that's higher than what it was before, what does that tell us? Trend is changing. Right? Now, all of a sudden, if we went to the next one and said, can I see anything else? Wait, this green dot is higher than that green dot, and that green dot is higher than that green dot. I haven't said anything about the moving average yet. I'm just looking at dots. Now, if you take a look at this and we zoom in and say, is there any more dots? The answer is yes. This green dot is higher than that green dot, and that green dot is higher than this green dot. Yeah, that's where I should have gotten in. Well, if we use the dots, okay, now can anyone think of a candy, okay, that might be called what we're talking about? Okay, now, so you know what I'm referencing. You'll never look at that box of candy again the same, ever. When I've had that box of candy, I always pull out the green ones and the red ones only, okay, based on our examples here. A little fun there. Now, so if all of a sudden, if these dots are actually going from low to higher low to higher low to higher low, you know, that is your diagonal support, okay? Where was the whole move started? The whole move started when the dam broke resistance. But here's the problem. A lot of people, unless you have experience, you can't see resistance. I'm going to tell you, if you listen in the last 22 minutes of this class, if you just use these dots, you could be able to draw the line and have more confidence on putting orders in the paper money account to practice. Now, speaking of that, let me just share this chart so we can look at examples, okay? Now, what I want to do is, let's say we said, okay, James, that's so great. Thank you so much for a history lesson. But what about right now? Okay, now, what I'm going to do is I'm going to go to it. Now, by the way, let's pull up something just really quick. So one of the, let's pull up this one first, okay? Southern Copper. Now, if I looked at this chart and again, when we think support and resistance, what time frame did I tell you? What did I tell you? Now, you're going to teach me back now. What time frame? Did I say 2-3 years? 2-3 days? What did I say? I said the last 2-3 weeks, right? What's the most important part of the chart? The one on the right-hand side, okay? So we're going to go back the last 2 to 3 weeks, and we're going to look and see what's going on. Now, green dots, support, red dots, resistance. If the green dots are flat, horizontal support. Red dots, flat, horizontal resistance. Now let's speak to the red dots first. All right, so here it is. Now, what I'm going to do in this case is I'm going to circle every time I get a red dot, and I'm going to answer my own question, which is, do we have more horizontal resistance or diagonal resistance? Now, if we have diagonal resistance, that means that over time, that the dots are inclined, meaning they're getting higher. So now, if I were to kind of say, okay, do we have a horizontal or a diagonal? Well, if I connect these dots, okay, I'm really kind of getting more of a diagonal trend line to this. Now, James, but I missed the one. Well, this is almost like quantitative methods, right? It's called the line of best fit. You're looking to see, when you look at the data, if you were to draw a line, which dots, okay, do we actually, if I were to draw a diagonal line, a horizontal line, et cetera, or any line, where do I hit the most data points? That's the exact same thing on support and resistance. So this outlier right there, we don't care. This outlier right there, we don't care. We only care about if I draw a diagonal horizontal line, he or she that touches the most number of dots, that's probably how most investors see support or resistance. Now if we look at the bottom, green dots, 1, 2, 3, 4, 5. Now, we kind of said this. Well, James, was there a horizontal support there for a little bit? Yeah. Did Barbara talk about, for example, price patterns, maybe like a double bottom? Could we say there was a double bottom there? Yeah, 2 green dots. Sure. If we look at this and say, James, we got 1, 2, 3. Could we say there was a triple bottom right there? Yeah, sure. I'd go with that. Okay. And now if you look at this, you're going to see that this dot, number 4, is higher than 3, 2, and 1. What does that tell us about trend? Trend might be trying to increase. Okay. There's kind of more, if we take a look at this and say, look, there's a little bit more of an upward diagonal support on this. Oh, this is hard. You know, yesterday my granddaughter went to preschool and I kind of chuckled a little bit because, well, they taught her about dot to dot to dot. And I said, you know, I was going to tell her, I'd say, you know, Grandpa's going to teach you something about dot to dot in terms of prices and just, you know, maybe in a couple days. Okay. Now, if we take a look at this, I want to talk about, is there a setup right now? Now, remember we kind of said when we have support and resistance, we can also create what's called a channel. Now, we always think that the channel, it's always going to hold. Now, wait, on NEM, it had a channel and it busted through there, broke through like a dam to the upside. And then it broke the next resistance, broke the next resistance, and broke the next resistance. Well, on something like SCCO, when you take a look at this one, what you're going to kind of notice is, looks like there's an upcoming split, check that. But now we kind of see that we have maybe a higher low that we're creating so far, not cold yet. That's why there's not a green dot. But I could go back on this chart and say, look, if the stock breaks out of this diagonal resistance, where might be a potential resistance? Well, the prior high right around, okay, this area right there was right about 219.43. Now, one of the things that's different about how I teach versus maybe sometimes others, and I'm not saying it's better or worse, okay, one of the things we try to point out is sometimes when people see resistance, they're thinking it's the Berlin Wall. There's no way it could be knocked down. Okay? Not true. Okay? If, for example, we're making higher lows, bullish price patterns, bull flags. Barbara's not here, so we can say flags. But if we're making bull flags, large green candles going into the resistance, higher lows on the price graph, that resistance might not be as strong as we think it is. Now, SCCO, copper stock, it's a part of an industry group. And if I said what other stocks are in the SCCO, I mean, Southern Copper, what other stocks are in the copper industry group? Well, one of them might be what? You type it in, okay? Now, if I were to look at this, what the investor might do is they might say, look, James, I'm going to buy some of the position. Nobody says the investor has to buy the whole position at once. Nobody said that. We think in our mind that. But what I'm now going to do is I'm going to right click on the chart, buy custom, and I'm going to go, and I want to do this in the paper money account where I could go ahead and, so we can track that, okay? So if I type in SCCO, and what I want to do here is I'm going to right click right on the chart, buy custom, and I'm going to say with stop. So when I say buy custom with stop, you're now going to see, and I'm just going to choose example given for time's sake, okay? I'm just going to choose 25 shares, okay, for time's sake. Point of this is not position sizing, okay? But if I look at this, I'm going to buy 25 shares now with the expectation that the price might try to break to the upside. Now, does this stock have a channel on it? Is this old area that we could draw now, there to there, is that a channel? You better believe it, okay? What's the significance of the channel? We said that. The width of that channel might become what they call the law of the expectation. If enough other people, technicians, are thinking the exact same thing, people might try to buy this stock in expectation, thinking that the price might go up to $199 plus $33. $33 is right there, $230. Okay, now A lot of times we think, oh yeah, people expect it. That's bad. Look, you wouldn't get married if there was an expectation. You wouldn't take a job if there was an expectation. You wouldn't buy the house if there wasn't some expectation built into it. I mean, let's not kid ourselves, okay? So if someone said, "Where's that shorter term target?" 230. Someone might also use support and resistance mathematically. That's really kind of based upon Fibonacci's, which is math, okay? Now, this is getting started with technical analysis. If we said this is hard, this is what they teach someone in kindergarten, going from dot to dot. But instead of dot to dot without a company and a price point, we're using a company and a price point with dot to dot to dot. Those lows are created from Kohlhoff markers on the chart, and the close below the low of the high day, that's created from lower highs. They're technical data points on the chart. You get them actually to flatten off, horizontal support. You get them to actually flatten off on the top, horizontal resistance. That's how we're using it, data points. Now, what I'm going to do just for time's sake, trade number one, we're going to actually set we already talked about target, shorter term, entry, stop. What I'm going to do is I'm going to take the stop underneath 198.22, and I'm going to go less 2%. It's going to give us a stop at 194.25. So we're saying if it goes down to that price, trigger it to sell at 194.25. The risk is it could fill at a lower price, and we know that because it says market. Market doesn't say definite. It's whatever the market can get filled at on the market price. 194.25. It's dependent upon what? The market. Now, so trade number one, SCCO. Now, I want to also go back. So what I just talked about was copper. Now, Scott Locke actually brings up now a lot of times, okay. Now let's think about where you live, okay. Let's say you live in a nice house, and the neighbor's house right across the street from you, my gosh, it sells for like 50 more thousand than you thought. The house 3 houses down for you sells for 75,000 more than you thought. Wow. So what happens? Even if your house is not one of the better homes in the neighborhood sometimes can buoy the price of the house that might not be updated. Now, why do I give that example? Well, FCX, what you're going to now notice is FCX has been one of those stocks. Freeport-McMoRan, which does gold and copper production, it kind of blew out the upside already. So if you get some of these bigger names based upon price, market capitalization, or just total value of the stock itself, equity-wise, institutional ownership, these bigger names, okay, being purchased, it sometimes can drag up some of the other stocks in the area. Now, I want to bring also up a silver name, okay? Now, if we looked at a silver name, PAAS. Okay, now let's go back on this for just a second. Now, we don't know anything, okay? And I said to you, where do you see support? If the only thing I gave you was these dots, and I said, circle those green dots. Now, you don't mentally have to circle. You don't have to literally physically draw them. Okay, you can see them. 1, 2, we can see it. 2, 3, 4. Okay, we can see it. If you also kind of use this tool that I'm looking at, this right here is the crosshairs. Okay, crosshairs. I'm down here. Okay, it can also kind of show you where is that. If we said, where do we get more touches? We probably get more touches right around the 42 threshold. If we start getting 1, specifically 2, 3 touches right around that area, you're getting more and more support built in. Okay. Now, what about the top side? I can't see the red dots. Well, let's go back to this. Okay. Well, if I bring it up on that other chart, which we had the red dots, and by the way, if you said, James, can you show me one more time how to put those red dots on? Yes. Okay. I'm going to go back to a little test tube. And then what I'm going to do is I'm going to go down to where it's that, fifth one down. Okay. And what we're going to do is we're going to go to the gear. That gear is you can speak Italian, French, German, doesn't matter. That's the eternal symbol for settings. We're going to go to the settings for that. And then what we're going to go down and say, look, hold, that's the green dots. It says yes. CBLOHD, those are the red dots. We want to make sure that says yes. Just click down. That's all we have to do. Okay, now let's go back to get to work here. So if I said, where are those red dots? Now remember, if the price is going down, they're probably lower highs. Okay, lower highs. So now what I want to do in this case, I want to kind of just circle, guide our eyes to where we see these lower highs. Now, if you said to me, are people better to see horizontal support and resistance or diagonal support and resistance, I would say most people are better at horizontal support and resistance than diagonal. Okay? Now, remember we also kind of said the concept of that you can actually have old support that becomes new resistance. Okay. Well, what you're now going to kind of notice is that's your classic where it was support that became our resistance. See that? This is kind of like in a relationship, right? When trust is broken in that relationship, it doesn't return. And it's kind of like you got to prove it to me, okay? And that takes time. In the stock market world, it's the same. If the price goes back up, a lot of those previous investors, they're doubtful and they sell on the doubt, thinking that the price is not going to be able to get above and it's going to fall right back down. Now, if we circle these red dots there. Now, if we were to say, were there spots of horizontal resistance? Absolutely, we could say horizontal resistance there. But we could also kind of draw down as that price drop. We see kind of like an angle or a line of resistance. Now, don't tell Barbara I told you this. If you said you pay more attention to horizontal resistance breaking out or diagonal resistance breaking out. Well, if you think about something, if you like to trade bull flags are created from lower lows, standard flags, and lower highs. If you like to buy after a pullback, does anyone here like to buy on a pullback? The pullback is created from lower highs. If all of a sudden the price breaks to the upside on that drooping bull flag, you're really buying on a diagonal breakout. I had a guy one time that was every other word that came out of his mouth was bull flag. He said to me one day, I don't really like to trade diagonal breakouts. I said, what do you mean? All you talk about is bull flags. And I kind of drew it up for him. I said, all these examples that you actually have, they're all diagonal resistance breakouts. Whether they're in the short term, intermediate, or long term, they're all diagonal breakouts. He goes, I never thought of it like that. I guess you're right. Now, if we take a look at this, where did the stock kind of reverse? Well, if we said that this was diagonal resistance, all of a sudden, if we break above, think dam breaking now, water pouring out. Well, if we make a higher high, the greatest chance is to make a higher low. Well, that means that all of a sudden, green dot. Notice that those green dots are right around about the $42 price level. If we start to hammer where the price falls down, bounce back up. Price falls down, bounces back up. Support is being built. Now, I'm going to tell you right now, something that can absolutely backfire someone as an investor. They can have the desire, I want to be an investor, I want to be a trader. But a lot of times we're so impatient. Support and resistance is not going to be built in 2 to 3 days or 2 to 3 hours typically. It's going to be over days, 2 to 3 weeks, good support levels. Now, if I went back to this and said, okay, what happened from there? And is there a trade set up now? That stock kind of reversed. Now watch the green dots, okay? You're now going to see that these green dots over time, you actually have kind of two of them at 42. You had another one actually right at 45. Now stop for just a second. Wasn't that area that I'm pointing to maybe an area of resistance? Did we go up and make a brand new high, check back to where that old breakout was? Did some people buy on the dip in the price action? You better believe it. And notice right here, you get the two touches, you get the two green dots, and then there's another green dot. The green dot is saying, hello, high or low? Anyone? Anyone? Now the investor's saying, well, I'm going to check on the level 2 data. Look, the level 2, what's wrong with just looking at the chart? Now, if we look at this and say, James, isn't there one more? You better believe it. There's one more right there. Okay? So hold on. Green dot, which comes from close above the high of the low day. That's close above the high of the low day. That's close above. You got 3 of them in a row. Yeah, but I'm going to go do some more due diligence. And look, technicians, they're just looking at the chart. Okay? They're just looking at the chart. Now, if we look at this, you're also going to kind of notice that we kind of have a pattern of the price. Well, when I say the pattern of the price, we actually have a prior high, and then it falls back down, runs back up, and a little short and shallow pullback. Now, what type of price pattern does that actually have? Where you kind of have a U or maybe a little tilted up W, if you will. This is kind of more your classic shorter term cup and handle. Not much of a handle, but that's not a bad thing. That just means that it's holding momentum. Why do we care? Well, because we can use the support or resistance to create a measurement technique. Now, the last one here. If we look and said, well, where's the bottom of this? I'm going to say right around $47. Okay? If we said, where's the top? We'd probably say right around 52. So the support or resistance is also telling us something about the measurement technique that other technicians might have also learned, taught, and it creates what they call the law of expectation. Doesn't mean it happens, but they might be thinking, look, if we break out, the path of least resistance might be 57, just based on looking at the price. Now, James, when I go back and I said 57, could that also be maybe another area on the chart as well? Oh, lo and behold, here it is. And so a lot of times when you kind of use a measurement technique, it could also coincide with previous highs or resistance levels as well. All right, now, closing this out, let's take a quick step back. So what I'm going to do on this chart, let me take that, clear it, right-click on the chart, okay, buy custom. Before I forget, I'm going to put $57. Does that have to be all? No, I'm just going to say first target, okay? If we said, where might the investor, let's say, set a stop? They might set the stop right underneath the moving average. 51.22, okay? Less, let's say, I'm going to use 3%. We use 3% of the price is below 50. Here we are, 51. If we take 1 more percent, it's not going to be dramatic. 49.68. Okay, now, I want you to think about this. As far as a takeaway homework assignment, I want you to find some stocks, look at some stocks that you normally look at. But what I want you to do is I want you to put the glasses on of using the green dots and the red dots. And then I want you to kind of look and see, is it helping you to see support and resistance faster? Is it also helping you to see the entries faster since you have more confidence on where the lines are for support or resistance to see entries and exits? These lines, support and resistance, is what is a lot of times creating the buying opportunities, upward trends, or the downward trends, or the broken support, lower lows. That's a lot of times what's creating it. So I'm out of my time here today. Was this helpful? What's interesting is the way you learn best is you teach someone back. You have a son or a daughter, a wife or a husband, grandson, granddaughter. I want you to teach them to it back, okay? And kind of go back and watch a couple of the examples I gave and then use it yourself and practice, okay? Now, if you're watching this on recording, I'm going to make sure that I post the scripts that I actually talked about in this session as well. Now, I'm out of my time here today. It's been my absolute pleasure. Also remember that we talked about getting started with technical analysis. Our next class is on swing trading by Michael Fairborn. And so thanks to Brett Crowther for answering those questions in chat, and thanks to all of you as well. And don't forget to subscribe to the Traders Talk channel as we talk about different topics. And also remember that in our class examples here today, we focus on support and resistance, okay? And some easy ways to kind of see that and evaluate that. Now, also remember that all investing involves risk, and this has been the class on getting started with that support and resistance using green and red dots. Thanks so much. Stay tuned for Michael Fairborn coming up next. Bye-bye.